Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Chicago wheat, Chicago corn, and Kansas City wheat. Hello and welcome. Before we start, I just wanted you to know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels or analysis or any other related items on these my charts. This was all my own original work, as I think you deserve to have that. So with that, Chicago wheat. Okay, so there has and is a lot going on here in a relatively short amount of time. The most obvious ones have been the multiple contradictory head and shoulders patterns and reverse head and shoulders patterns between March and July. However, the dominant pattern here is the fairly obvious bright red mid-February to mid-June bearish Andrews pitchfork. We're at this time in between the overhead bright red upper time currently at 545 and a quarter and the bright red middle time below currently at 488 and a quarter, if anything closer to the upper time. Separate to this, there are two other features now impacting the market. Firstly, the continuing impact of the declining purple neckline extension, currently 528 and a quarter. This gently sloping lower neckline has been a proxy for an attractor for the market heading lower, and specifically it has been acting as a mid-May to mid-August neckline for the most recent head and shoulders top. Now it's a complex head and shoulders topping action. 2 weeks ago I left some very early potential targets below for this complex head and shoulders top, for primary target X down at 504 and a secondary harder to reach target X1 down at 474. As I said at the time, this is early on, but I might as well do it now, and then if it is negated I can easily retire the targets below. Though we have not sustained a move below the purple neckline, I still endorse those targets for now. This leads on to the second feature, and it is the 38.2% absolute Fibonacci line at 520 and 3/4. This was and is being challenged over the last 2 weeks, as well as this week, along with the nearby March 2024 low at 523 and a quarter. Both these were tested back in mid-May and they held back then, though the breach lower at the time was quite significant in size, seemingly showing how little we might have underneath as support once the break lower is established, till we get down to the historical congestion support seen between 500 down to 495, along with a little lower down the 2016 to date dark blue uptrend, and that's currently at 491. Chicago corn. The dark blue mid-February to mid-April bearish shift pitchfork on my daily chart took over as showrunner for the market in June from the earlier and at the time quite successful bearish Andrews pitchfork for the same period. As you can see, it's been very good at showing the bearish angle of attack since it was created back in mid-April and fully acknowledged in June. Thus right now we are just slightly above, well, a little bit more than slightly above, the dark blue middle time currently at 408. The market had in mid-July moved down after testing and ultimately being pressured lower by the dark blue middle time along with its companion, the very interesting declining green short medium moving average currently at 411, down to the low created earlier in mid-July at 391 and a quarter, and that was just before changeover by what was then the dark blue lower time as well. For most of late July and early August, the dark blue middle time and green short medium moving average have squeezed the available space between those two above and the July low below. I said 2 weeks ago, and I quote, "Eventually something has got to give," and end of quote, and we may be on the verge of seeing something giving way, as we have indeed been within, and quite well within, as I said 3 weeks ago, and I quote, support of dubious strength that is fairly evenly spaced out at 409, 403 until the November 2020 low at 397 and this year's low at 391 and a quarter, end of quote. I carried on looking further below and I quote, "There is limited support below this, realistically at 386.5, then the August 2024 and 2024 low itself at 385, before a low, not monthly low, but just a low from late 2020 at 369. After this, well, we have at the bottom of my daily chart the old 2006 to date uptrend, currently at 349.5. End of quote. I don't know if I should have added all of that, but to be honest, I wanted to mention something from 2006. Anyway, I moved on. Those support levels, and some had been resistance levels, they are back now as supports. One such has been tested today and given way as resistance, and now is support, a crucial one. That's the December 2020 low at 414.25. Now we are starting to emerge on the top side out of this congestion between 391.25 to 414.25. Just keep an eye on those two features mentioned earlier, descending dark blue middle time and descending bright green short medium moving average. They've given limited room for maneuver topside unless we break through them, and today we might well be doing that. If, on the other hand, prices turn back lower, the room for maneuver will be less and less until the dark blue middle time crosses down through 391.25 level in the middle of October. As I said 2 weeks ago, and I quote, I do not expect to see the market wait until then, rather than something will give way before then, I suspect. End of quote. Kansas City wheat. The major pattern here continues to be, once more, the dark blue February to March bearish shift pitchfork. A few months ago, it was not a great looking pattern, having had both the lower time, currently at 453.75, and the upper time, currently at 548.5, pierced, but not broken. Thus, both times continues to play a role, a more significant role these days, in showing the bearish angle of attack. And I should also mention the dark blue middle time, a little below the market, as this also continues to be an important and seemingly possibly becoming an attractor for the market as it heads lower, and that's currently at 501. Interestingly, since May, a new pattern has emerged, though this has also been breached, though not as yet broken. Whilst at the same time some older resistances and I suppose older supports as well have influenced the market again. Now the new pattern started out as a double top pattern, Adam and Eve type, from the middle of May through to the middle of June. However, this pattern morphed into what was initially a small, though nowadays is quite large, breached but repaired and today still operational purple expanding wedge pattern, currently 506.75 to 583.75. I should also point out, as I said 4 weeks ago, and I quote, I'm beginning to suspect that the purple lower trend line is now working in association with the dark blue middle time. However, I still think the dark blue bearish shift pitchfork is the more dominant pattern, and I would not wish to take anything away from it. End of quote. Meanwhile, looking nearby, we have overhead now capping the market. A pair of dynamic resistances in the shape of the declining short medium moving average, currently at 537.25, and the declining mauve medium moving average, currently at 541.25. I'm sorry I really haven't highlighted the mauve and the dark and the green, bright green moving averages, for the green for the short medium and mauve for the medium moving average, but they're there anyway. Just keep a wary eye on these, as they do provide immediate resistance and overhead on any attempt higher, yet at the same time it's a resistance that is moving lower, each of them, along with the market. Now, we also have close and nearby the 38.2% absolute Fibonacci line at 532.5, and the slightly lower low for August 2024 at 527. As many of you know, I've said all along that this August 2024 low was in turn created by that same 38.2% absolute Fibonacci line. These between them managed to hold up prices over June and into July, as well over part of the early August, but last week the market established itself below the 38.2% Fibonacci line, and this week below the August 2024 low. This brings me to one final important feature I'd like to draw your attention to. It's one that is rich in history. Yesterday, the market reached down and touched, recoiling immediately higher from, in part, the lower trend line of the purple expanding wedge pattern, but I believe it was a greater part, a recoil back upwards from the bright red, unreconstructed December 1999 to date uptrend. That's right, an uptrend still existing from last century that is still on my daily chart, currently at 506. Please keep an eye on the uptrend, as it earlier turned the market back up in the middle of May, though, and it's an important thing to note, it did not have the dark blue lower time in attendance this time, as it did back then, but, and it's important but, but it does now have the dark blue middle tine instead in close proximity, though this too is moving away lower, so please watch out. Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpick and ADM Investor Services International Limited. And here comes the final important bit.